Okay, welcome in everybody. Hope you had a wonderful weekend, wonderful Mother's Day. It was awesome. Went to church yesterday, and we got to visit all the mamas in my life and we cooked some steaks on the grill. It was a good time. So I hope everybody is having a good Monday. So the markets are selling off yet again, negative 2.51%. Wow, right? Notice the volume is elevated yet again, averaging about 7,800 contracts. And let's see if we can see here. The AD is really negative, negative 361. So it looks like we're taking another little dive off here. And we're below the overnight low, which seemed to be a little bit of resistance as well, right? If we're trying to go up, it seems like it's resistance. Opening 15-minute range, we're below VWAP. We're below the 15-minute opening range. We're below the hourly mid. We're below the overnight high. We are below it all. And the world is just, they don't understand it. They don't understand how in the world are we in this situation? What's happening? Well, the issue is, and you and I know it, this is a Fed-induced market. The Fed caused the massive bull market. And now, what is it? Every action has an equal and opposite reaction. So we are now headed downward. And y'all, there's a lot farther down to go. This thing is not over by any stretch of the imagination. Now, it may be over on the short term, as I'll show you on the big green monster. So no surprise here, right? That we go down, have a gap down, we go down and we find some consolidation along our 180% line. It went into an oversold territory and then decided, hey, wait a minute, Bobby's got all these great charts. We need to get back into fair value. So it's fighting it out here, right? Fighting it out. And, you know, we would think that we might get a bounce back into here, but we always know there's always a chance this thing can go farther down. Now, the one thing that's given me a little bit of hope that it may pop back into here is looking at the linear regression channel. And the linear regression channel shows us that here's the E-minis, right? That we are down at the bottom of the channel. So, I mean, we certainly could go lower, and there's nothing to say that this thing won't go beyond the bounds of the linear regression. It did here, but then comes back in. But I'm thinking that it's probably, you know, could still go down, but I think we'll get a bounce at some point. But it really doesn't matter if we bounce or not, does it? This is just our fun little hypothesis. You remember back here was where I called the bear market. Everybody sneered and laughed. Bobby, this is a buy the dip moment. And it indeed was not. This thing is going down and it may go back up here, but y'all, we've got much farther to go in this bear market, much farther to go. So what I would say is, even though it's down big today, it's down in an orderly fashion. Everything looks orderly to me by everything that you and I follow. All right. So with that being said, let's go in and measure our Greeks. Let's see, let's do the IRA first. Get our Greeks in here. Now the net lick's going to look bad today. Just is. Oh, this is row one. IRA first. Here we go. IRA. Net lick is going to be down, no doubt. 5,922. What are we? 95,000? Let's see what we're doing now. We are not that down, but we are down. So, let's see. 100,060, 41. 100,060.41. So we're down a bit. Uh-oh. We're up 899,000. Sorry. 100,076.16. There we are. So we're down 474 in this account. So let's check. We'll do our Greeks and ratios. Monitor. Take our groups off. So we can see our Greeks. All right, so our delta is 207.41. Not surprising, just markets down big, our deltas will go up here. And theta 246.86. What the crud? All right, so our theta 246.95, 246.95, our vega is 84.66. So what we'll effectively do today is roll down the calls, y'all. That's all we're going to do today is roll down calls. So we're way too high on our deltas. So we'll have to roll things down. So what is our buying power? Whoa, 43.888. Unbelievable how it swelled, right? Look at this. 43.888. So we're using 43% of our buying power. Based on the VIX, we should be at 40% buying power. And indeed, it says we need negative deltas in our RChem. Okay, so no surprises, no surprises. So now let's go in and let's close a winner. Bobby, you mean you got a winner today? I know, it's crazy, right? Let's see if we can find one. There's up 53% on that bear trade, negative 254. Plus 103, well, that's better than that one. Negative 82, negative 393, negative 367, plus 41, 32, 63, 368, negative 125, negative 72, negative 141, 106. So that's not quite as much. So go here. Delete that. Must have fixed that the other day. This one. Oh, I got all my things here. Let's just get this TB on the IRA account. Oh, wait a minute. That's right. So my deltas were wrong. I got to go do everything again because that was giving my whole portfolio stuff. All right, plus 41. Minus 20. Oh my gosh, those shorts that I sold the other day. Remember I showed we're only down $52. Isn't that great? All right, that's on the Black Swan hedge we were starting. 112.11, down 20%, down 221, down 377, down 11, 2, down 110, down 68, down 120, down 248, down 131, down 306, down 359. So we found our winner, right? Where'd it go? Which one was it? Yeah, here it is. So this is the 112 bear. We're up $77 on this trade. So let's take her off. 39 days. So I got to take this one off and this one off. And I got to take 2 of the 45.60 calls off. Okay, look at that. Okay. Close in order. And we're going to add those 45.60 calls. 39-day cycle. 60. Now I got to redo my Greeks because I gave all my portfolio Greeks. 45.60 got way up here. Way up here. So we got to close 2 of these. So do that, and we'll make that 2 of them. And it says we can close it for a $2.25, $2 credit. Probably can't. We'll see what we can do. Come on, fill me. Do it for $2 credit. So let's replace it. Let's go 175. Come on. Chum on, little feller. Get us out. $1.50 credit. Nothing. Jack squad. And you know, the markets are understandably wide, so we'll have to work this a little bit. They may even make us pay for a debit today. Don't behave. Do that. Work, little baby, work. I got nothing but time. $1 credit. Come on, we still want to get a credit out of it. Nothing. I could work them separately too, right? I could work the orders separately. Aha! We're out at 75-cent credit. All right. So this was the 112 bear fourth. Oh crap. See, we had those same strikes somewhere else. Okay, that's fine. But we'll remember we got for 75-cent credit. So 112 bear fourth. I'll fix that. 112 bear fourth. 112 bear fourth. Where's it at? 112 bear. Come on, be here. Here it is. 112 bear fourth. All right. So we got out for a 75-cent credit. Let's go put this in here. So credit of, oh, here's where I haven't got this updated yet. So we got to figure out what the dollar amount is. Order. Duplicate order. So we got out with a credit of $2.13. $2.13. 112 bear fourth. Here we go. Credit of 213. So that means I got to do negative 2.13. So we got out of it on 5/9/22. So we were in that for 14 days on that trade. We made a profit of 63.75. 63.75. That will take Mama to the Applebee's on a date night. 63.75. Right. So wait, 63.75. So let's go and grab our profit calendar. IRA, and we'll start our week off right, even on a big down move, 63.75. Yeah. So we will format painter, paint it so it looks the same. Color green, baby. Another green day. All right, now, so we got our profit. Now let's evaluate our trades like we did the other day, because are we at a point that we need to start rolling some of our naked positions? That's what everybody's looking at, right? Do we need to do that? Well, the best way to do that is to go to our Analyze tab. Well, first of all, let me fix this up. So it says we still got our bear trades here. So it's 3,800, 3,850. So let's see where those should go. 3,800, 3,850. Let's see, 3,800, 3,850. Aha, so this should be, I'm gonna move those to the 112 bear seventh. So I got the same strikes there. Let's make sure that's right. So the 112 bear seventh should be naked. It says I took those out. Let's make sure that's what it looks like. 112 bear seventh. Yep. So I got to move these two to that group. Move to group. I got to move on to 112 bear seventh. There we go. All right. Move that to 112 bear seventh. Now we got it all looking at. So now let's evaluate each one of our trades and see if we need to do any rolling or anything. So we'll do one expiration. Make sure you got MES here. Single symbol. right? Hide simulations, and then we'll look at the groups. All right. So let's go to 112 bear fourth, which that's the one I just closed, I suppose. 112 bear eighth. What the crap? Is that one closed too? I'm not looking at 112 bear eighth, single symbol. To fourth. Okay. So I'm trying to look at all my things. So this one looks really good, right? So we are at 4,044. Is that our current price? Yep, 4,044. So I'm just kind of looking to make sure everything looks safe, right? 4,044. There we are. So if we go down here, we don't care. So the 112 fourth looks good. 112 12th. Well, look at this, y'all. Perfectly safe. We may be down $56 today, but at expiration, we'd be up $60. So nothing needs to be adjusted there. 112 bear seventh. Okay. That one looks good. We want it to go down, huh? Here, that looks fine. So 112 fifth. That's on the call side. Nothing wrong there. 111 second. Okay, now here we are getting down to the lower portion of the profit 10, but we're still at a point that if we were to go to expiration here on 5/21, then we're going to be up $235. You see our break even is still down here. So where would I most likely roll? I'd probably roll if we get down to the break even here, which would be 3,997. So I'll be looking at that maybe as an opportunity to roll out. But I don't think I got to do anything today. There's nothing showing me that that's a huge problem. 112 10th. Well, we're at the top of the 10. Nothing to worry about, even though we're down $60 today, right? So everybody sees how to evaluate all your trades, right? Well, those are those micro shorts, and those are fine, right? To start a BSH, nothing wrong there. We're only down $63 on the trade. So we could still go down another 20%. We'd only be down $1,005. But at expiration, look, we're still up $153. Incredible. These trades are so resilient. Look at this, y'all. We're at the top of the 10. No problem here. 11211, 112 fifth. Okay, we're kind of lower third of the profit 10. Haven't gone past the break even yet. That's fine. 111 fifth, 111 fourth. We're fine. We're not at the break even. We're good. 1116, kind of the middle of the 10. No problem. 1117, middle of the 10. No problem. 1127, middle of the 10. No problem. Look at there, y'all. I mean, it's beautiful. All these are beautiful trades. Now, some of you will panic, through the week, and you'll go, "Oh gosh, I'm down $1,000 today." Yeah, and your trades are perfectly fine. You just gotta keep an eye on middle of the 10. Look at this, top of the 10. Right? What is that? Strange. Let's see. So there's a short option. Looks like that. It's one of those that I've harvested something. Looks like 11111. Kind of the middle of the 10th. Unallocated. I don't have any unallocated. So you just saw, hey, we're down, but even with all of the down movement, y'all, we're fine. Let's see. It says, I know the 111 and 112 are generally designed to be put on and taken off at the same time. However, is their profit level in the put debit spread that you want to take that profit, then roll the naked put out? And yeah, I mean, I would probably look at that, right? I'd probably definitely look at that and see how profitable those things were. Roll that out, close the profit and put debit spread. I would probably take the profit anyway on that and put me on a new put debit spread. Let's see if we can do 4 expirations. How many expirations are we in now? Let's see. We have positions in 1 expiration, 2 expirations, 3 expirations, 4 expirations. So we've got positions in 4 expirations. Well, this is a part of a platform hedge, so we should be able to analyze everything in our 4 expirations. So 4 expirations. Let's do single symbol hide simulations and put all groups. Okay, let's see if we can make heads or tails of what we got here. So here's current price, right? And it says we're down on the positions of $2,112. However, if price stays here, we're up 1514 on the 21st. We're up 3,700 on June 1st. We're up 4,200 on June 18th. And by July 1st, we're at 4,100. So, I mean, you look at this and you go, yeah, it looks bleak today, but all we got to do is hang on, baby. Hang on. We're looking fine. So here you're down $7,775. Wow. Okay. So I think we're fine right now. I think we are fine. So let's put us on a new trade. And let me redo my Greeks again because I did it for the entire portfolio. So let's go over here. Take our groups off. So we're at 108.77. Theta is 85.90, 84.94. Oh no, our theta's too low. Our vega is 80.51. So got to increase our theta. To me, that looked like too big of a jump. So we are at 27,918. 27,918. So we're under on our buying power. This is good. 27,918. This tells me I'm not taking too much risk. We're at 27%. I could be at no adjustment on my deltas. How about that? That looks a lot better. So if it says no adjustment, then what I'll probably do is, and it's hard doing this on a down day, y'all, but I'll probably do just a call. I won't do a bearish call 112. I'll probably just do a call 112. So what's the difference? Well, let's just see what a call 112 looks like. Call 112 looks like this. So we go over here, we go trade, we go closest to 55 or closest 60 days without going over. So we're here. And then we're going to do a long call vertical, 50 points wide. All right. And we'll move that down to where it's $10. Move our strikes down to where we get them to around $10. Way on out here. $50. All right, there we go. So fill for 975. So then we got to figure out, we got to sell something to pay for that. What was our strikes at? I don't remember our strikes. 48.30, 44.30. What is that? 44.30. Okay, and 40. Crap. God, my mind won't work, y'all. Sorry about that. I'm a little foggy today. 44, 30, 43, 80. 4380, 44. Did I have already something there? Is that the problem? What did I do? It's crazy. Maybe I was already long something there. Oh, darn, I missed it. That's fine. All right. I won't worry about it too much. So now I got to go out and finance that. So we need to bring in about $20, right? Somewhere. So we could sell 2 of the 4530s, get us about 2250. So why don't we do that? So 2 of the 4530s, move that quantity up a bit. So we can fill there. Yeah. All right, good. All right, so let's go put that trade in over here on the other account. So keep in mind, it didn't tell me I needed bearish to trade, but nonetheless, my deltas are a little positive. So I want to do something on the call side. So that's why we did that. So let's see what we're going to name this thing. Let's put it in. So let's trade. That's 52 days. We did the 40, the 80, 44, 30. Let's go ahead. 44. I'm not as quick doing these on the call side because I'm so used to putting them on the put side. 4380. So we're going to buy that. 4430. Sell that one. All right. And we're going to sell 2 of the 4530s. Should be the right one. 4530s, 3450 credit. Yeah.
Bobby, I think you have your initial buy and sell backwards.
Oh, do I? Yeah, something's wrong, right? So you're saying I should buy, I should sell.
Yeah, I think you should buy that one and sell the next one. Isn't that correct?
Yep, I think you're right. See, Rick finds these things, y'all. It's amazing. That looks more like it. So I'm buying the 4380, selling the 4430. Yeah, that looks good. Let's see if we can feel for. And look, 0 buying power, y'all. That's cool. There we go. Just a 112, just a normal 112, except it's on the call side. So let's see what we're going to name it. Here we are. 112. Here's a 6. 112, 10. 112, 11. They call this 112, 12. Uh-oh. And I've been needing to put 2 tranches in each time. Let's see if we can fill them. Duplicate order. Let's get another one up there. 1475. Come on, fill it. There we go. 1475. So we did 2 tranches. All right. So we did 2 tranches in this account. We said this is going to be the 1, 1, 2, 12, we believe. And our strikes are 4380, 4430, 4530. And this is calls. This is a 112 with 52 days. 2 days. Entered this on May 9th. Can y'all believe it's May 9th already? Unbelievable. And what was the credit? 1475, right? So we brought in a nice little credit of $135.74. 11212. So let's go find him and put him in his little group. Come here, little fellas. Show groups. 212. There she is. And the reason I'm doing 2 contracts on this one is because this is the one that, you know, I'm not using as much buying power. I need to do two tranches. 2, 12. Oh man, I already got one. All right, let's change it to 13. Change it on my spreadsheet. 13. Where is my 1, 1, 2, 12 if I didn't put it in? Unbelievable. 13th. All right, good. So we're finished there. Finished with that one. All right, so let's close this spreadsheet. Now we can go to the other one. And I'll probably end up putting that same trade on in this other account. They seem to go similarly. Let's see how bad our Netflix doing today. How bad are we beat up? So we are at 27, 740.59. Put down a bit, which isn't bad on a 2% down move. Not bad at all. So let's do our correction ratios. Okay. See what she says here. All right, so here, let's change accounts. That one. Let's take our groups off. All right, here we go. So 95.34. And our theta is a very robust 153.44. Our vega is 298.95. And let's see how our buying power. So we're doing good here. We're going to be using too much buying power, though. We know that. And we're at 15,146 in buying power. 15,146. So we should be using 40% buying power. We're using 54%. And this one says, hey, Bob, you need a negative delta adjustment. Okay, so with that needing a negative delta adjustment, that means I got to do a different trade over here. Okay, we can do that. So negative delta adjustment. So it wants me to do something totally different. So because I need negative deltas, now I've got to do a bearish 1, 1, 2. Everybody understands why. I'm sure there's no questions on why I did one trade in one and a different trade in the other. So here we got to do something. We got to build this out a little bit different. So we're going to go 52 days. We're going to make a bearish trade. So instead of a long put vertical, I'm going to do a long call vertical. We're going to do a long put vertical. Yeah, 50 wide. And move that down to where it's $10. All right. 11.25, 10.75, 10.25, 9.75, 37, 37.50. So let's see if we bump this up to $10 if we get filled. Tax. Let's go in for 10.25. And we're filled. All right, good. So we're filled on that. So now we got to sell a couple of calls to pay for that. We could sell one call, but we're probably going to sell two. It's way out of this expected move area. But we may have a big old move to the upside, but we're not really afraid of that, are we? Because we're really long in our account. That's why this thing is telling us, hey, Bob, you gotta do something, man. You gotta, get out and get you some more strikes. So we could do, don't we move strikes? Let's do two of these, collect about $24.25.20. 1 and 2. See, it's giving me buying power by selling calls. Isn't that wild? It's increasing my buying power. Right. So let's go put that one on. All right, so let's put this one on. Micros. Right account. All right, so here, the trade is the 3750, 3700 put spread. 3750 helps it go in the right way, Bob. Oh, Bob, oh, Bob. 3750, 3700. Come on, little wheel. So we're going to buy the 3750, right? Sell the 3700. Buy the 3750. Sell 3700. That's right. And sell 2 of the 4520s. Come on. Or sell 2 of these. 2 of the 4520s. It's a $15 credit. Could we? Oh, could we? Look at there. 0 buying power. We like that. And we are filled at 15. All right, so this is a bearish trade. So let's go put it into our little spreadsheet. One tranche. And this is going to be a 112 bear 11th, it looks like. Sure. 112 bear 11th. Strikes are 3750, 3700, 4520. And this is on both, right? I got calls and spreads. And this is a bear 112. Got in at 52 days. $9.22. And we got in for, I think, $15. So brought us in a nice little credit of $69.12. Now, if we go to our little weekly premium thing here, our day is complete because we were supposed to sell $59 worth of premium. How much did we sell? We sold $69 worth of premium. Look at us being the overachievers. So this is 112 bear 11. Let's go put him in this group. 112 bear 11. Unallocated. I click, move the group, add group. 112 bear 11. Beautiful. All right, so we got our trade in, our new trade in. So now we got to see if there's something that we can close for profit. Look at there, 69%. Now, I know some of y'all are like, oh, we got to close these. We'll look at all of them, see if there's anything we need to roll or do something. Here's 118%. Oh, yes. 11210, down 26%, down 400%, down 351%, up 6%, up 49, down 245, up 71, down 363. 30, 66, up 104. Well, this is better, right? 112 bear 4th. Let's see if we can get out of this one. Oh, this is the same one we did on that other one. So 112, so we got to sell or buy back 4560 calls in 39 days. Okay. Let's go find those calls. 39 days. What were the 4560s? Buy those back, close this whole trade out in one little order. 4560. I wish they'd make it where you could just right click and close them all, but it's a little bit difficult. 4560s. There they are. All right. 39 days. I'm gonna buy 2 of these. $285 credit, $250 credit. Let's see, we probably won't get filled here. Oh, we did. Oh, behave. All right. So this was on the 112 bear fourth. All right. And we got filled for 250. 112 bear fourth. Let's go find 112 bear fourth. Here it is. So we got filled for a $2.50 credit. So that means I got to do negative 2.50. So the credit is 662 that we received. Hold on a second. I don't have this thing yet done here. So our debit is, let's see where I've got that formula here. If that's equal, okay, let me just copy that. That's that formula there. So that should be negative 662. Good. And we got out on 5/9/22. So we got a nice profit of 68.24. 68.24. Y'all help me remember it. I know my mind's going. 68.24. Great. So let's get our profit calendar. 68.24. Put that in. So we made $68.24 today. Starting the week out right, y'all. Got Applebee's money. Save that, close that. All right, so 68.24. And we did our delta adjustment on our trade. So now let's look at our trades and let's see how safe they are. Right? See if there's something that we would roll. And it's really easy to see the break even over here, isn't it? So let's go one expiration. And MES, we're going to go hide simulation, single symbol, and then we'll check out our group shot. Okay, so here we go. So let's look at our 112 bear ninth. That is a beautiful trade, y'all. Beautiful. All right, looks good. We want the market to go down on this trade. 112 bear ninth looks good. 111.75. Look at this, middle of the 10. Bobby, you're down $207, you fat black glass spam wearing Elton John listening nine-toed freak. Yeah, I know. But y'all, if we hold on to June the 1st, we're up $310 on this trade. And going past our break even yet, so who cares? All right, 111.75 looks perfectly great. 112 bear fourth, we just closed. 112 10th, well, that's a beautiful trade. We're not even into the 10th yet. 111.70th. You see why we love these trades? So we're kind of at close to our short strike, aren't we? But we're not past our break even yet, and we're not quite to that short strike, naked strike. So we're fine. If we stay here, market stays here, we'll pay up $310 on this one. 111.77. Look at there. Beautiful. Middle of the 10, even though we're down $251. 112 bear. That's a beautiful trade. And you learn to learn these risk graphs, and your risk tolerance will be a lot better now because you don't freak so much over your daily P&L. You start saying, hey, man, I'm in the 10. I may be down $192 today, but if we were to stay here, we're just perfectly fine. 171st, 112.11. Look at that. Beautiful. 112.15. We're kind of at the top of the 10. 112.13. Strange looking little bird, but we're fine, right? Fine. 174, middle of the 10. I mean, so you may see some trades down 300 and 400%, but you're not panicking. Everything looks good. That's a beautiful trade. 214. Look at that. It looks like something that's been gone on it, but that's fine. It just looks like a negative, just a short put, right? Allocated should be nothing. All right, so that's what you do. Go through those trades, on these down days and go, whoa, do I need to adjust something? So does everybody understand why I'm not adjusting anything? Oh my gosh, Bobby, you're down 400% on a trade. I got it. You're down 277%. I got it. But we're just totally fine. totally fine. Let's let time go. Because, so far, this has not been a crash, y'all. There's nothing in here that has been a crash. We got some big, big, big bars that have gone, right? But this isn't a crash. This is an orderly down move. It's exactly what this is. This has no surprise to us whatsoever. We called it on this day. Here's the day we said, well, y'all, I've seen enough data to know we're in a bear market. They go to the top of the channel, but we are downward, baby. And we got farther to go. Trust me, we have not seen the last of this bear market. So if you're a buy the dipper, you're on the wrong side, baby, right now, in my opinion. In my opinion, it doesn't matter because we go by science and we're just following the numbers. We're following our Greeks and ratios. Does it say that we're too long? If it is, put in a little trade. You don't have to sell two futures to get your negative deltas. Just put in a negative delta trade, right? Until we get back to a point that says no adjustment. All right, guys, great session. Hope you have a wonderful day. I will see y'all tomorrow.